Hi, and welcome to the Market Alert for Tuesday, the 6th of October 2015. In today's Market Alert, we're going to go back and have a look at yesterday's trading session. It was different and for some difficult. So what I'm going to do is take you step by step through what actually happened yesterday, give you a background to what actually is happening in the market as well, and also show you how you should handle these type of days. They don't come along that often. They're very infrequent, and when they do, it can be a bit of a brain fryer. And speaking of which, as I said to a lot of people, it's like any sport. If you've got two evenly matched players, like say for example, if any golfers out there in I think it was 1999, Greg Norman against Nick Faldo in the Masters Championship, they were both equally matched, and yet one couldn't get his head around the game and lost miserably. And that's the same in trading. It's a head game. It's the signals appear, and then it's how you actually manage it mentally. And the best thing to do, if you can, is to actually remove that emotion and also be able to stand back from it as well. If you get involved emotionally, which is easier said than done, granted, because obviously there's money on the table, but it's something that you actually learn to do. And what I'm going to do in this video is actually show you how to do that and the tools that you can actually use to actually make it easier as well. So first, the background of this market. This market is a very interesting market. The Dow Jones since 2008 has been, well, it's March 2009 to be precise, received a shed load of money from the Federal Reserve as QE money, quantitative easing. Nothing but a scam. It's a mass experiment. And this money found its way into the bankers' pockets via the stock market in bonuses and everything else. Now, the problem for the Federal Reserve is this. They have pumped trillions into this market. And as a result, they are now painted into a corner. That is, they want to actually, in quotes, normalize the market, as they keep calling it. And they want to increase interest rates. Now, as I keep saying to people, what you've got to keep in mind here is that this crisis isn't over. The recession isn't over, and there is no recovery. You've got trillions that's made its way into all sorts of asset bubbles, whether it's classic cars, etc. And I've done a video about this. I'm just going to recap for those of you that are new. So this money's found its way into all of these Ponzi schemes, the biggest asset bubbles of all time, the biggest one being the bond market. And when you look at the background of all of this, you can see the blatant manipulation that's going on in the markets at the moment. And this was evident on Friday with the non-farm payroll figures. They came out way off target. The market drops 372 points and then recovers and moves back up 475. That just smacks of gross manipulation. And the manipulation is coming via the Federal Reserve because they don't want to see their Ponzi scheme burst, like we saw on the 25th of August, I think actually the 24th of August, when we saw a 1,000-point drop in the Dow before the market actually opened. So when you know all of these facts and you've got those in the background, you've done your research and you know that they want to keep this market to the upside. They're trying to keep the illusion alive. And no matter what the news is that comes out, that's precisely what they will attempt to do. Bad news is good news if you're a banker or if you're part of the federal team. Move the market back to the upside. Just keep bidding the prices up. So this is what is going on in this market at the moment. That's it in a nutshell. I mean, it's deeper than that, but this video isn't about the whole of the background of the market. I mean, I've recorded a video about that on YouTube. You can actually find that and have a look at it. The key here is knowing the background allows you then to be able to step back and see what is actually going on, and then take an objective view of what's going on as opposed to a subjective and emotional one. So let's just play from yesterday. We've got the market in the pre-market session here, and the market's opened in the white part there. This is the 235 bar. We see some buying coming into the market, and we've got a news item. I think it was the manufacturing. You'll see in a second anyway. It's just after 3, and okay, let's have a look and see how good this news is. So in a moment you'll see me having a look at the news. You can see prices there are starting to move higher slightly. If I can just speed things up just a little bit, just so actually I think I'm just about to do it. There we go. What I'm going to do is to have a look at the Forex Factory results. In the software we're alerted to when a news item's out, but it doesn't actually give us the show us what the actual figures are. So here we've got a classic example. We've got the ISM non-manufacturing PMI figures, and they come out and you wouldn't believe it, they're actually worse than they were actually forecast. Now, bearing in mind that this is a Ponzi scheme, and the Federal Reserve and everybody and his dog wants to keep this market alive because it's giving the illusion that the recession is over, there's a recovery in place, and everybody's back to where they were prior to 2008. That being the case, and what we have in the background, we see the market's reaction to it. It comes down a bit, and then I'm going to fast forward because otherwise we'll be here for 6 or 7 hours, which we don't want to be. So now we see the market moving down. We see some selling coming into the market with the red, that red price bar, and then guess what? The market moves back, and we get our first signal of the day. We get a PTI signal, the market closing above the 16,650, and it's time to actually trade. Hopefully the market will continue to move higher. We've already had a 150 point move in the background during the pre-market session, so prices should move higher. Now also you've got to take into consideration here something that's happening which is rather unique at the moment, and that is the Chinese market has been closed for the last 4 days, and it's closed until Thursday as well. So the Americans can do what they want at the moment because the Far East markets, the major market that's been causing the turbulence around the globe, or part of it, is actually closed. So they're free to move the market higher if they want to as well. There's going to be less resistance. So we got the first signal of the day, and the market moves higher. I'm just setting up the trade there. That was what was flashing around, and prices move higher, and there we see the order filled, and then the market comes back. Now there's not a lot we can do about this. We've got the bad news in the background. They've started to move the market back to the upside. So what we're doing is making sure that we're covered just in the event that it doesn't work out. So the market attempts to move higher, and then it comes back below the entry price and back towards the 16,050. And now you can see the third time the market's actually attempted to go above the entry price and then come back, and that's usually quite significant as well. So now we get a sell signal, and what we've got to do is follow the market. So we've already bought here at the entry price. We've then got the entry price for the short. We're not letting the market go down to the stop, which was initially a 48 point stop. So we're going to reduce that 48 between these two figures to 34 points. And again, if you've only risked a maximum of 3%, between 1 and 3% of your initial or available funds, then this won't be an issue. It's an issue when you overextend yourself, either through greed or thinking that the market is just going to continue moving high without having a contingency in place as well. So the market then trades sideways. We get another buy signal, but we ignore this one because we've already bought in this one, haven't we? We're buyers of the market here, but we've got an opposing sell signal. So that one disappears off the chart, and the reason it disappears is because the market goes through its stop loss. The stop is hit before the market actually at the entry price, so that one just disappears. We can ignore that. So now we're heading down towards the entry price for the sell. So you'll see the flash there of the trade being put on, closing out the other trade, and then prices decide to move lower, but they don't go all the way. And the reason they're not going all the way is because over to the left here, the market found support before, and after this economic news item, the market came down, found support, and now you'll see prices finding support here, and you'll also see the volume building as well. And then they rally back, and this is where your brain starts to get fried, because, and this is applicable to all of us, you're looking at it and going, no, it can't go up. Surely it can't go up. But that's the market. The market wants to go up because of what's in the background and what we saw on Friday as well. There's been a failure of sell signals in the last 2 days because the market is moving back to the upside. They're ramping it up to the upside because that's what the manipulators do. They want the market higher. So here you'll see now the market actually put in a buy signal. So we've been short at 16,634 and we've now got to buy back 16,663, which is another 29 point loss on top of the 34 points that we've already had. So it's not a good start to the day. But we know that the upside is where the market lies, and you'll see why in a moment when we go a bit further. So now we switch back to the upside, and the order's filled. We've bought the market, you saw the tickets flashing around there, and then we start moving up, and guess what, it comes back again. So what we've got a situation here is that the market's got indecision. It doesn't know whether to go up or to go down. And the problem is, of course, that affects us as traders, because we start looking at this and thinking, blimey, is it going to go up? Is it going to go down? Well, the background of the market gives the clues, and I'm just going to fast forward here because you'll see the market coming down towards the stop there, because we're actually buyers of this market now here. We've reversed that short position, and the market then puts in another sell. It came close to actually filling it and stopping out the other trade. When I say filling it, filling the stop order. There's the entry price. Prices didn't hit the stop, and then they come back. We get another buy signal which we ignore, and then this order is cancelled because the market went back up to the stop and knocked that one out as well. So now I'm just going to fast forward because the market gets into a sideways move. We're starting to feel a bit more comfortable now because the market's actually staying above this line. We've had the two losers. There's nothing we can do about that. That's trading. So now we go into what would be deemed as the quiet time, and the market comes back again and tests. We ignore this sell signal. Well, actually, you've got a choice here, because you can either, in the quiet time, generally you wouldn't actually put on a new trade. But if you're already in an existing trade and the market isn't going higher and it's going to sell off, then you would be daft not to actually take this trade. So again, that's an option that's open there to actually do. But on this occasion, the market comes back and has another look and then starts to move back again. And once again, you'll see the sell signal disappear. We've got another buy signal there which we ignore because we're buyers from this signal here. So now we've got a situation, again, we're going to stand back and just take a look at the moment. We've got three buy signals here. We had another one where the market came back after this news item and took it out, which is a shame, because had the market not closed below there, we would have still been moving up to the upside. It's just the choppiness of this initial session yesterday. So now we see the market moving up. I'm just putting the, as we hit the scalp, I've just put the lines back on. So now we're at the scalp, and I'm just going to come back. I think what I was after, that's what I was after. So during the choppiness, one thing that's very good to do, and this is why I cover it in the market alert, is to actually have a look at the daily chart. When you're in the thick of it, you can't see the wood for the trees. It's a bit like, and all men will relate to this. You go into somewhere and you in the car, you're lost. And your wife says, why don't you stop and ask somebody where we are? And you say, no, the ego gets in the way, there's no chance of that. Oh, I'll find a way, I'll do it instinctively. But you never do. And this is the same in trading. Sometimes you just got to stop, pull the car over, get the map out, and have a look at the bigger picture. And this is precisely what I did yesterday. I thought, what is wrong with this market? Why doesn't it want to go up? And as soon as I pulled the car over, got the map out and had a look, and I could see we had a bit of a dead end here. We got the 50 bar average where the market was banging its head against, and then we've got this major resistance and psychological level of 16,702. So now at this point I'm taking a view. I'm looking at this and I'm saying, okay, so the market's going up because that's what they want. That's what the Federal Reserve want. We saw it on Friday, bad news, market up. Today, bad news, market starting to go up. So now as we hit the scalp, as you see there, and then you'll see me redraw the lines on so that I can see how much is on the table along, see how it corresponds with the ETX account. So I'm just going to draw those back on. So now we're through the scalp, and what I'm going to do is to delete that extension that I put on earlier. So now I'm taking a view. I've looked at the background, I've looked at the map, and I can see that 16,700 is going to be a major resistance. So what do? I've lost 34 points, 29 points. I've got 3 buy signals there, which have all hit the scalp. The market's gone up on Friday, it's gone up in the pre-market. So now I'm looking at it and saying, okay, let's see if this market will actually trade up to the 16,702 and take this out. Because if it does take it out, then it's likely we're going to move higher. So I'm going to fast forward, and you'll see the market's got indecision there. And then it hits the 16,700. Now what I've done, you'll see here, if I'm just going to wind back, when you see me do this on a video. So the market's going up, and I've just deleted the stop price. And the reason for that is the market's heading up towards the 16,702. And as it hits one of these lines, I'm moving the stop to break even. I'm going to reduce the exposure. I've already lost 34 and 29. So now I want to actually start pulling this back. So here you've got 32 points on the table, and I'm prepared to risk that on the basis that the market will actually go up to the next lines. And that's what I'm doing now. I'm just reducing this. I'm coming back. I'm having a look at the roadmap. I can see there's a problem here, but if we can take this out, we then can actually move higher. There's no volume around either. I'm just going to pause this. There's absolutely nothing. This market is just being marked up. It's not actually being bought, it's being marked. So again, I'm just going to fast forward now. The market takes a moment or two. It doesn't come down to the entry price. And I'm just going to fast forward quite a bit. We ignore that buy signal because that's inside of the quiet time, and we're already biased from this signal, of course, over here. Now we're sitting at 47 points. I'm making back the gains, but then we have a problem. The market starts to come back. We've got 49 points, and I've moved the stop to break even. The market's struggling. We're in the quiet time, and I make the decision that if it comes back to this line, then it's a case of taking the profits off the table. So we're picking up 39 points, 38, 39 points on this trade, and then the market comes back, hits it, out of the market, and let's wait and see what happens at 6:30. So I'm just going to fast forward. We're ignoring these signals because this is in the grey area. We don't trade in the grey area as a rule. We're waiting until the traders come back after their lunch at 6:30. Again, I'm looking at the daily chart. Then I popped out for half an hour, and that's why that stays on there. You can see it just bobbing around there. And then I'm going to have to move now to the end of day chart. Unfortunately, I did leave the record on, but I must have paused it for the final trade of the day. So let me just switch over to the software, and we'll resume with what happened there. Okay, so the final signal came at 25 minutes past 7. At this point, I was actually on a Skype call helping a subscriber set up their software, and the market moved higher, and I shared the screen and said, look, the market's going to go up, hit the scalp, and hopefully go on to the red line, the psychological line. Unfortunately, the market didn't do that. It came back. It then went back up again. And then on the third attempt, it was a case of collecting the money, because if it's not going to go on the third time, it's not going to go at all because of the lateness of the trading session there. So another 20 points recovered along with the 38, giving a total of around 59 points. The losses were 63. So you can see how the recovery there, giving just 5 or 6 points short on the day, which wasn't too bad considering what a nightmare the start of the session was. So the point of this video is to actually show you that we do get the odd daylight yesterday, Monday, the 5th of October. There's always going to be a day that comes along and it's going to give you your backside a headache. That's trading. It's a matter of having to deal with it when that actually happens, and that's just part and parcel of the trading game. Like I say, the good news is they're infrequent, but what you need to know is how to handle those each and every time that they actually present themselves. And like I say, the key to it is to step back, come away from the noise, and actually look at the daily chart, which is why we do that each day in the market alert. So let's just finish off and have a look at the daily chart for today, and we can see we went through that 702. The market's going to do its damnedest to try and hold at this level, to actually try and move up to the 16,938 if it can. If not, it's going to come back down towards that 50 bar average, but only time will tell. In fact, I'm just going to reload these charts because the volume's missing off there. Let me just do that. Right, so we're back, and as I said earlier, this market moved up on fresh air yesterday. There is no buying around, there are no green bars moving the market higher. Absolute fresh air, pure manipulation again. They just don't want the market to move back to the downside. We came close to that 16,000 on Friday. The psychological level of 16,000, I'm telling you now, keep that one in mind as well, because they don't want the market below that, because following any break below 16,000 takes us back to the August the 24th when we had the 1,000-point drop in this market. So that's the current picture. The market's struggling at the moment. The pre-market session is very quiet, and that's because China's closed, so I would recommend you don't trade anything in the pre-market session until China are back on board on Thursday morning. It's a pain, but we can do nothing about their annual holidays. For some unknown reason, for whatever it is, they close the markets for 7 days during the month of end of September, October. So that's why this market's quiet in the pre-market session, but I'll guarantee you when they come back on Thursday, then we should have a few fireworks in the pre-market session as well. And news-wise, what have we got that they're going to play around with today then? Nothing in the official session. Everything's before. Draghi's going to speak at 6 p.m. and then at 10:30 p.m. they're going to wheel out Williams from the Fed to have a chat with the press and try and boost the market as well. That's at 10:30, but the market will be closed by then. Right, that's it from me. I will see you in tomorrow's edition. Thanks for watching, and if you need any other help or advice, then do drop us a line. Thanks for watching.